Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. We've got another great guest for you today. Excited to dive into our conversation. I've got John Brackett with me today. John, how you doing?
I'm doing great, man. I appreciate you asking. I'm doing great.
So John is the CEO of Fidelity Business Partners. FBP's purpose is to build great apartment communities and improve how people live. FBP is a real estate investment and development company with a focus on multifamily assets in Southern California, Houston, and San Antonio. FBP is an owner-operator of a property management and construction business to support the execution of its business plans after acquisition. So, John, obviously a very brief bio. You have really three companies inside of this FBP umbrella, and you've been doing business in Southern California, which very seldom do we have guests on that are in that world because of some of the challenges and restrictions that go with being involved in multifamily there. But before we dive into some of the specifics about your business, our podcast is all about the journey. So we'd love it if you'd back up and tell us a little bit about your background, your backstory, and how you got into the real estate space.
Yeah, sure, no problem. I started in really my first exposure to real estate was through banking. I started in commercial banking. This was many, many years ago. But started with a very large bank, Fortune 50 bank. Started off in sales, and I transitioned into an area manager. And the bank, fortunately, I don't know if they still do this then, but when I became an area manager, it was a really large market area, right? And at that time, my market area was it was North County, San Diego, and the Inland Empire and the desert markets. It was huge. And so one of the big takeaways from that, and I kind of struggled, managing that market area. In fact, for the first probably 6 months I did, because it was huge geography. I had multiple locations there, and I had to kind of figure out how to build teams and communicate with them without the technology that we have today, right?
Mm-hmm.
Today makes everything just incredible. But that was probably one of the greatest experiences that I've had in building teams and managing people. And of course, I think as a leader, you also have to deal with just in many cases the own restrictions that you impose on yourself, right? And one of my restrictions was, hey, very difficult to manage this market because of the geography. So I think once I accepted the fact that I had to figure that out, I was able to move through that. But those skills have all been able to map over to what I do today inside of the space of investing in real estate, right? And I think the biggest thing that I got from banking was that I would also underwrite commercial loans back then. Back then, you do what's called spreading. They don't do this anymore, but as a banker, you were able to analyze tax returns right in front of the client or their financials, and then give them some sense of where they fall in terms of loan dollars. And so one consistent thing that I saw is all the really wealthy people, probably 90%, built their wealth in real estate. Right? And I was in that industry for almost, I think, about 8 years. So that was a really big takeaway for me. And so I thought, okay, well, I really want to concentrate in this space because I like it, I understand it, it's exciting to me. And most of the wealthy people that I work with, at least 90%, man, made their wealth in real estate. So it was kind of a no-brainer. My wife was a commercial real estate appraiser back then. I was in commercial banking. So when we transitioned in 2008, when the market crashed, we transitioned. And I told my wife, I said, hey, look, we will never see an opportunity like this again. So we went all in, and kind of the rest is history. That's the condensed version.
Okay, well, I'm going to dig some more out of you
Yeah,
because
yeah.
here you are in commercial banking. I know a lot of people that were in the real estate world or the banking world in 2008, experienced what we all did and put their head in the sand and covered up and got into the fetal position in the corner. What had you done to allow yourself to look at that as an opportunity versus a time to contract and try to just hold on to what you did have? What was going on in your world that we could learn from that allowed you to sort of use that as an opportunity to springboard yourself forward?
Yeah, that's a really good question, man. So a couple things happened, right? If you peel back the layers, one of those things, thankfully, so just to back up, I left that large bank and I went to a smaller bank that was still a pretty good bank, pretty good sized bank, but they were based out of Michigan. So when the market tanked, and I negotiated a bunch of stock options and warrants, actually quite a few of them. So my reason for leaving the comfortable cush job was to take ownership in a smaller bank that I had more influence over, right? And that I was a senior vice president in that position. When the market tanked and I negotiated a really good package for myself, obviously I wasn't going to leave to negotiate a worse off position, right? Well,
Yeah.
when the market turned, my package was pretty favorable, man. And so what ended up happening was it created some collision with the president at that bank. And then, we parted ways. I obviously had to find something else to do, right? I mean, my wife was 8 months pregnant at the time.
Mm.
Oh, I'm sorry. I went from that bank to another bank. Okay, that's what it was. I went from that bank, got a job at another bank, did something very similar, and President and I we collided again, and he let me go. And here's the great thing about that: I was so relieved, man. I've never felt so much relief when that happened because I knew that I was never going back, right? And at that point, truly, I was just unemployable. I mean, I already made up my mind that I was going to go out, and create my own destiny. But here's the funny thing is when I came home, okay, yeah. So, and this is years ago. So when I came home, and my wife was 8 or 9 months pregnant. I think she was 8 months pregnant, right? We just bought the house that I'm in today, and pretty close to the beach in Carlsbad. So we spent a lot of money on the down payment to get this house, right? And so didn't have a lot of cash in the bank at the time. So I came home and I told my wife, I said, hey, guess what? She goes, what? I said, I got fired from my job. And this is the honest goodness truth, man. I said, hey, guess what? I got fired from my job. And I raised my hands. I didn't really know how she was going to respond because she was pregnant, right? And then she paused and she looked at me and she said, okay, now you can go out and you can do what you're designed to do.
Mm.
I never forgot that. So we high-fived each other. We went out and we had sushi and celebrated, and that was it. That was the turning point.
Interesting. And so when was that? Like, just to give our listeners some context, when was it that you came home and said, "Hey, I got fired"?
Yeah, that was, man. That was let's see. I've operated this business for 13, going on 14 years. So that was almost 14 years ago.
Okay, great.
Yeah.
Excellent.
So I started doing this full time right from the beginning. Yeah.
Cool. So, getting to that place, I think it's great. You get home, I got fired, and now I can actually do what I want to do. Great mentality to have, right? And clearly you had a spouse that was on board, that believed in you and was, willing to do whatever is necessary to help you guys accomplish your goals. And I know personally how important that is. What were the steps that you took to really, carve out your space in this world of real estate and development?
Well, back then in 2008, man, we did what the market was offering us and where we could fit in the best, and that was in residential real estate. Even though we both had commercial real estate backgrounds, but it gave us a pretty good, launching pad. And the reason why we're focusing on residential is we just didn't have a lot of resources at the time. And so, fortunately, a lot of the contacts that I had in banking, I had good reputations with them. So they were willing to invest with me in these projects. And my first partner was my CPA, right? And he saw my tax returns and he was like, hey, man, what are you doing? And I said, well, this is what we're doing. We're flipping houses. And so that's kind of how we started. And what I did is I leveraged my finance. My strength is finance, right? And numbers and people and numbers, man. That's my strength. And so, I was able to leverage that to analyze deals and make decisions that I thought made a lot of sense for our investors and for us. And, eventually we got to a point where we were buying out our partners and we had no partners. And today we operate, we buy quite a few assets without any partners. And then we also, partner on much larger transactions. And so that was kind of the progression.
So maybe let's describe your business for us today. What does FBP focus on today? I mean, I obviously gave a brief description, but if you can give us a little bit more context about what you guys do.
Yeah, sure. I mean, in summary, our purpose is really clear, right? We want to focus on, building great apartment communities. And in that process, we want to improve how people are living. And I think, when you have a really clear mission like that, or we call it a purpose, it makes decision making really easy, right? So that's our overall focus. Now, how we go about executing on that, we do that in a couple different ways. Number one is on the acquisition side of the business, identifying apartment buildings or opportunistic opportunities that we feel can fulfill on that mission, right? And they
So
typically
just to clarify, when you say building great apartment buildings, are you talking ground up development? Are you talking, existing with deep value add? Maybe describe for us what your typical project would look like.
Yeah, so that was gonna be my next comment. So
Okay.
usually they come in a couple different forms. One is, we're acquiring a product, I call it a product, an apartment building that's already finished, meaning it's already built out. And there's usually some form of value add component to almost every single purchase that we all do. We just may not really know that, right? And so normally they come in a couple different forms. The value add, it's the assets being undermanaged, the land is being underutilized, or the property has extreme deferred maintenance, right? And those things usually equate to some form of undervaluation in the asset. But the only way that we achieve that asset is if we cure those items and we build that value, right, by increasing income. So that's what it looks like. The other side of that too is building product ground up, which we started doing a couple years back. And we have a couple projects going on right now, some small, 6, 8 units, and some very large, 100 unit project in San Diego. And so that's what that looks like, right?
Mm.
That's really what we focus on right now, and how we're able to kind of move that vision forward. And so there
No,
are a couple of reasons why. Go ahead.
no, I was just going to say I want to dive into a little bit more detail about what your business is doing today, but just to bridge the gap between that world of I got fired, hooray, and starting to flip residential, single family residential to now a full on commercial multifamily development company and investment firm with a corresponding property management company and construction business, right? So here you've built this, conglomerate of multiple businesses that started out in single family fix and flip. What, if you can, maybe just summarize for us that transition period? Because a lot of our listeners are in that space. They're in single family and they're in small multifamily, and they want to get more scale and move into larger commercial projects. What were, if there was any guidance, or maybe just share with us your journey, what that looked like from that transition?
Okay, so let me qualify that question. Okay, so
Okay,
when you
please.
ask me about the transition, what are you asking for specifically? Are you asking for maybe one of the key components to allow for that transition to happen faster, more successfully?
What
Because
did it look like for you?
there's a lot in there, right? There's a lot
Yeah.
inside of that to bridge that gap.
Well, I guess the reason why I'm asking the question is our listeners, there's some of our listeners that are in that space and they're on the brink of making this transition. They know that they want to move into the commercial realm. They're just not quite sure how to do it. They're in the single family or they're in small multifamily and they want to make a transition into larger commercial multifamily projects. How, based on your experience, would you guide them into making that transition?
Yeah, let me give you what the typical answer is. Okay, the typical
Okay.
answer is, hey, go find a partner, and hey, go do larger deals. Okay,
Okay.
that's the typical answer. The reality of building wealth, my wealth has not come that way. Um, and so there's a massive amount of value in buying larger deals because you immediately scale. And we're doing that now. But the decision for why we do that comes down to scaling so that I can bring on more talented team members to build a going concern, right? Something that can be here even when I'm not here anymore.
Mm-hmm.
And that's kind of what motivated that decision. But here's something that I have done. So my colleagues and I have a lot of friends. A lot of them are much smarter than I am, and they're much wealthier than I am. But when I look at some of the decisions that we made, we took different paths. Same industry, maybe different product type, right? They focus on industrial, commercial. I decided to go multifamily and buy some small commercial assets. But when I look back at the decisions that we've made, and one of my really good friends, who's now he's probably 75 years old, but he's taught me a lot. And one of the things that he taught me to focus on is, John, do not focus on units. Okay, don't get caught up in the conversation of units. Okay, focus on profitability. And I never forgot that conversation. And he gave me some really good examples. And I had another buddy of mine that did the same thing. Because all being equal, you could get wrapped up in buying really large assets. But if you do the math, and I've done this before, made a bunch of purchases like this last year for the same reason. I'll give you an example. Let's say you and I are looking at, we both have $100,000 and we want to make an investment. Okay. We're trying to figure out where and how to deploy that capital. So, we reach out to a bunch of people and they say, okay, well, here are your buckets. Your buckets are, you can invest alongside of me and 100 other people or 50 other people in this 100 unit that we're buying for $10 million, right? And your proportionate interest in that is less than 1%. Okay.
Right.
In this case, actually, no, it's 2%. Or you say, you know what? Let me see what else is out there. And you find a fourplex. Okay. And you buy the fourplex for, comparatively speaking, $400,000. So $100,000 a unit. The 100-unit property. Let's see, 100-unit property. So in this case, you spent $10,000. So say you spent on that roughly 50 a unit, right? Okay. In this case, $100,000 a unit. Same thing.
Okay.
So here's kind of the decision where the decision making process comes in. When it's all said and done, we both have the same $100,000, right? But ultimately, what we're trying to do is, it doesn't matter the investment. At the end of the day, we're trying to generate the greatest return possible with the least amount of risk, right?
Mm-hmm.
At the end of the day, that's the decision that we're all making, is how do I protect my money and make more of it and get it back at some point in time. That's, when it's all said and done, that is the key principle behind investing, right?
Yeah.
So using this as the example, the 100 units, say when this 100-unit property, they're projecting that we're going to make a $3 million profit. So that's a 30% return on my investment. Benefits are, I don't manage it. I'm totally passive and I go about my day. Okay. The other one, the 4-unit property, and that's a 30% return, but I'm assuming that that's a 30% return in the first year. If I take that out over 3 years, it's only a 10% annualized return, right? Whether you want to look at it as an internal rate of return, whatever.
Sure.
Okay. So now let's look at the 4-unit. And this is a very true scenario. This is a property that I bought that people are sending me emails back and forth, or unsolicited offers. Just got one today on the small 4-unit in San Diego. But I bought it for $350,000, right? I did an exchange into that from a property that one of my best friends and I owned together, one of my first investments in San Diego, that I sold to another friend of mine, and they turned it into a beautiful property. I think we split 70 grand. He ended up using that 70 grand to buy his mother-in-law a house. And I end up using that 70 grand and putting it into this 4 unit property in San Diego. That's still under market in rents, unfortunately. So fast forward couple years later, the offers that I'm getting on that are between 1.3 and 1.5 million dollars, right? So my point is, and even if I go back 3 years from when I bought it, okay, easily the return on my money was $200,000 on top of the 70 that I put into it. That's what I mean, right? So where are you getting more leverage? Are you getting more leverage in the 100-unit property, or are you getting more leverage in the 4-unit property? The asset doesn't matter. What matters is your decision-making process on where you're going to get the greatest return for the least amount of risk. The end. Now, where that starts to change, though, is when you start to build up your equity in these properties, and then you start saying, okay, well, now my equity is being underutilized. How do I redeploy that to make more of it, right? Now you have to start scaling because for a lot of different reasons. The other decision-making process is, okay, well, looking at both of those examples, right, is one of them, the selling proposition is no management. The other one, hey, I have to get dirty and I have to learn how to manage money so that I can make more of it. In my personal experience, okay, the way that this is the conversation of making money. Investing is a conversation of making money. I don't know why people don't talk about that. It's not like money just falls from the heavens, man. You have to learn how to make it, right? So in my personal experience, the only way to get good at making more money with less effort is you have to actually be involved in making money. Yeah. Like, you don't get better at doing things by not being involved, right? That's an oxymoron. That's a Wall Street thing. Give me your money and you're going to be amazing 10 years from now, 20 years from now, 30 years from now. Man, anyone that is really wealthy that I've talked to, and I'm talking about very wealthy individuals, passive investing doesn't exist. Let me say that again, because this is going to confuse a lot of people, but I'll clarify that, right? It doesn't exist. Okay. And what I mean by that is if you want to give someone your money and have them invest that for you, and you want to be far removed from the investment and have someone do all the work, that's an option. It really is. But if you still want to understand how your investment is performing, you still have to be involved in that process, right? You have to be on the investor calls. You have to be able to ask them questions. You want to follow up and say, hey, what's my money doing? Okay, why are my distributions low this quarter? And I get those phone calls as well, and I welcome the calls. The point there being is your money is going to grow at the rate by which you are committed to being a part of it and learning how to multiply it. It's that simple.
Yeah, I love that perspective, and I think you make a great point for someone who is interested in being an active investor. Then the decision is really simplified to how can I make my money work the hardest for me, and I'm willing to be actively involved in investing. You also make a point, though, that you have limited partners who invest in your own projects.
Yeah, but you have to think about what you said. Let me, because we're saying different things.
Okay, please.
The difference is you said that you could be actively, how did you put it? Actively involved or not actively involved. I'm not saying that you shouldn't be actively involved. What I'm saying is you should be actively involved in making decisions and learning what your money is doing. There's a big difference, right? Me being actively involved in influencing the investment to create an outcome physically is very different than me being actively involved in the decision-making process around that investment and knowing what the heck my money is doing.
Sure.
That's what I'm talking about. Now, you can combine the two, like what I do, okay? But some people, like my CPA, when we first partnered, he loved his job and he built a great business. He was really good at what he did.
Right.
So what he was willing to do is invest alongside of my money, but he was very actively involved in asking me questions and looking at his returns and understanding what his money was doing.
Sure.
He wasn't involved in the day to day like I was, but he was still involved in understanding and learning what his money was doing. That's the difference.
Okay. Fair enough. Yeah, I think we have the same philosophy, which is there's no right or wrong answer to this. I think you're pushing
Never.
people pushing people towards, or at least your preference is towards being actively involved in managing your money and getting the most out of your money. But there are people who love their W-2 job, who love their corporate career,
I see they
and
love.
for them to take time and energy and effort out of what they love doing and they're very good at, and they're able to generate significant amounts of income that then needs to be deployed. The idea of them stepping out of their W-2 to go become an investor doesn't make any sense for that individual. So it's case by case, right? For you and I who are deep in the business of real estate, well, that seems ludicrous. Why would I accept a 20% IRR if I can go out and make a 30 to 50% IRR? Because we're actively involved. Your
Okay,
thoughts?
but let me back up because I think we're saying the thing. I think there's so let me explain it this way. Okay, you brought up something that I thought was great. You said, "Hey, W-2 person over here making a lot of money, making $200,000-300,000 a year, maybe $500,000 a year, and you have to start deploying that money somehow to generate a return, right? You can't just let it sit around; it has no value. Okay, the only way you multiply that is if you invest it. Agreed? Okay,
Agreed.
all right. So
By the way, I'm loving this conversation.
yeah,
This is an unusual conversation for our
yeah,
podcast, but I love this back and forth. So please go
yeah.
ahead.
No, it's great. It's great. So would you agree that that person still has to make a decision around how they invest their money?
Absolutely. Yes, they
Okay.
need to be active in figuring out how to effectively deploy that capital. Whether that's just networking with the right people who they feel like they can trust to grow their income and their net worth and their cash flow, or being even going deeper than that and underwriting their own deals to a level that they feel comfortable at.
Okay. So we both agree on that, right? And so now I'll ask another question. I'll add a layer to that. All right. Same example. Who do you think will ultimately have the better results in the long run? The person that's actively involved in understanding how to make more money with their money, or that just says, hey, look, here's a check. And I've seen a lot of this happen. Here's a check. Let me hope for the best. Hoping, by the way, is a very ineffective investment strategy. Let me hope for the best. And I'll check in with you 5 years from today.
Right.
Now, who do you think is going to generate the better return?
The individual that's actively managing their money.
100%. Right. Now, where
Yeah.
people make the mistake, and this conversation is a perfect example of that. We are so conditioned to think that being actively involved in an investment means being physically involved. It does not. Being actively involved in your money just means you know what the heck's going on with it. And you have some expectations that you're willing to stand behind. And if those expectations are being met, then guess what? You go deploy that capital somewhere else. Another decision.
Yeah, absolutely.
That's all.
I yeah, I agree. I think that this conversation, which has been hopefully valuable to the listeners, I think we're saying the same thing, maybe in different
Yeah.
ways, but
Yeah.
it stemmed from the question of why you decided to go from house flipping to larger commercial deals, and I think that's where this conversation stemmed from. That being said, I may have been making some assumptions that that you had made a transition away from small multifamily and smaller investments to large commercial multifamily. But it sounds like you may be doing both. Is that correct?
I just look for the best decisions, man. I look for the best decisions on how to deploy my capital. Where am I going to get the greatest return for the least amount of risk? And then if you add time to that, it also becomes a factor, right?
Yeah.
But now, though, to your point, is I have to start scaling, because if I want this business to continue to go on when I'm not here, and if my my kids are capable enough to run a business like this 10 years from today, then I want to be able to build out a business that can operate without me in it. Very difficult to
Mm,
do that without scale. It's just very
yeah,
difficult. So
absolutely.
that's what's motivating that decision. Um, so, anyways, hopefully that answers your question.
Yeah, no, no. So what if you were to identify your ideal project today? And again, I understand highest return, least amount of risk. But in your world, what does that look like today? What are you looking for in a deal from a nuts and bolts perspective, rather than just highest return, lowest amount of risk?
Yeah, what I'm really looking for, man, are problems that I can solve, right? That's ultimately what I'm looking for. If you boil the question down, I'm trying to identify problems that most people are unwilling to tackle, but that I can solve. That's it. And I quantify a return on my time to solving that problem, and a return on my capital, and a return on my capital for my investors, right? That's what I'm doing every day.
So, are you exploring mobile home parks? Are you exploring self storage?
Right now, what I'm really focusing on are ground up projects in very densely populated markets. San Diego is one of them. I think there's some really good opportunity in San Diego and LA right now because of just some of the housing constraints. And you get rewarded for taking on that risk. Let's see, on the cash flow side of the equation, and those are really more equity plays, right?
Mm-hmm.
I think on the cash flow side of the equation, Texas, man, I really like for a lot of different reasons. Um, but those markets are a little bit different. When I'm buying in those markets, I'm buying for long term, they're long term plays, right? 5, 10 years out. And usually those assets, man, now the acquisitions that I'm making in those markets, they're in the path of progress.
Mm-hmm.
So the value add component, not as significant, meaning there's not a lot of deferred maintenance. Because at this point, I really don't want to step into those kind of assets, right? I have one more that I'm going to turn that I bought in Montrose in Houston, which is a really great market. That's a smaller property. That was a 1031 exchange. Um, but that's kind of the play is
Hmm.
let me move into better markets, better neighborhoods, better submarkets, stabilize my cash flow a little bit better, maybe not generate um, the kind of returns that I would if I had to put a lot more effort into it. But that's how the strategy is changing. So here's the concept, right? I go in markets like that for cash flow, but I'm still finding more stable markets. And I go take more risk in high density markets where I get
Mm.
protected if I make a mistake because there's just more demand. And the tenant base is different. The tenant base, a little bit higher quality tenant base, right? Average FICO score here in San Diego, 720.
Mm.
Average FICO score in some of the markets I'm in Texas, depending on the market, like 520. Okay, so your asset is going to be impacted by the tenant base. And so I want to have a mix.
Yeah, love that. Well, I want to be respectful of your time here, and I want to start winding down. I've got a few final questions for you, though.
Let's do it, man. Let's do it.
The first off, this is not a health and fitness podcast. That being said, for those of you that are just listening, John has older kids. I think you said your oldest was what, 24? Or how old your oldest? 24, 25 years old?
Yeah, she's 24.
Yeah,
24,
yeah.
20-year-old and a
And
15-year-old.
and John looks like he could be 25 to 30 years old. So John, tell us what you do from a physical perspective. Maybe it's a diet, anything like that that has led to your success from that aspect of your life.
Listen, man, there's no secret in anything that we do, right? It's all, you just have to put the hard work into it. I like working out. It's something that I just enjoy. I like the challenge of it. My workouts are not as intense as I used to be. However, I am planning it's called the Patagonia
Mm-hmm.
in Chile, which is in November. So that's something that I'm training for this year. I think it'd be really cool. That's a 90 miler. Man, there's no secret, right? I mean, you wake up, you do a 30-minute workout a day, you do that consistently, that 30-minute workout a day for several years, and hopefully it keeps you healthy and keeps you vibrant.
Well, I
That's,
had to ask. I had to ask.
yeah, no secrets, man.
Um,
There's no secrets.
the next question I've got for you is what's the biggest challenge that you're working to overcome in your business right now?
Yeah, that's a really good question. The biggest challenge right now is, you know, we're our property management company is not performing the way that I wanted to right now. And it's all driven by people and process. So right now, every decision that I make every day, everything else that doesn't revolve around building process systems and hiring great people, I delegate it out. So I'm trying to be hyper focused on those three things. And the reality is, I had to come to the realization that um, I am not as good as that as I led myself to believe. So I have to now start training myself on how to do those things better, right?
Hmm. Love that. That's some good insight. What's something that you're just absolutely crushing right now in your business that we could all learn from? Something that you're just knocking out of the park?
Let's see. One thing I think, man, right now we're bringing out some great people. That's one. And so I'm my mindset has shifted from being an individual producer to now a team producer, right? And so that question's a little bit more difficult for me because I am in a different place. And as a team, we're not performing the way that I expect at this point, but we're going to get there. If I looked at being an individual producer, then it would be the returns that we make when I buy, right? And so those would be the differences because those returns have really sheltered us that a lot of those buying decisions and those acquisitions from just some of the other mistakes that I made. And that would be the two extremes, right? One as a producer would be how I buy, and the other one is now learning how to be a team producer, right? To scale and building out big teams and big production through teams, and just a different skill set that
Love
I'm
it.
learning. Yeah.
Well, last question I've got for you is what's the best way for our listeners to connect with you and learn more about what you have going on?
Yeah, just go to our website, www.fidelitybps.com, or you can link in with me through LinkedIn is a really good place. Just look for John Brackett. That's a great place. LinkedIn, if you want to connect there, just reach out, send me a message, and happy to connect.
Love it. Well, John, I've enjoyed our conversation today. Thanks for going back and forth with me a little bit and
Yeah,
sort
no,
of
I will.
feathering out some different concepts as it relates to strategy and investing and ideas around that. Loved hearing about your transition from the commercial banking world and getting into the fix and flip space and single family, and then growing your business and the challenges and opportunities that you're creating for yourself as you scale your business here. Appreciate you coming on and sharing your journey with us. And yeah,
And I
go
have a
ahead.
question for you.
Yeah, please.
Okay. So I'll wrap this up really quickly. I know we're wrapping this up, but
Yeah, go ahead.
you were asking earlier about the gap, right? So the gap is, that transition from single family to multifamily or to scaling is leadership, man.
Mm,
Hone your leadership skills, okay? And learn how to lead yourself first, okay? And then it's much easier to lead other people. And that doesn't matter who, whether you're family or others, but leadership, man, is really an undervalued skill. But that will help with your greatest transitions. Okay. Second question is, what question do you have for me that you think can add more value to your listeners? I mean, I always ask that question.
well, I appreciate that. I think we've gotten quite a bit out of here. So
Okay, good.
I think we've done a pretty good job with it, and really have appreciated your time and your insights and your perspective. That's definitely very helpful. So I think that's probably something that we can tie a bow on this one and call it good.
Nice, man. I appreciate it. Well, thank you.
All right. Thanks, John. Have a great day.